Hello, this is Amy from iTradeAIMS.net, AIMS Stress-Free Trading. Here again with another review today, the 22nd of April 2021. So today I was doing something new, trading off the price bars only using all the experience that I have. So what I'm going to do now is I'm going to go through all the screenshots that I've actually taken and shared in my Discord. Let me bring that Discord thing here as well. So throughout the day, so let me explain. We have this Discord channel where we have, some are free, then you have premium members, and then you have the chat room members who can access this area. So when I trade, I don't know if I did it. I'm forgetting. Yeah, yes, I did. So in the Trading Talk channel, this channel has only, like, I talk and the rest can hear. And this one, I stream my screen as well from time to time. But most of the time I like to talk. So that's what I've been doing. And meanwhile, when I'm not talking, we're going through all the chats and I share my screenshots and all that. So what I'm doing now is that I'm going to go through those screenshots one by one and turn them into a video and talk about what's happened. So this is the FTSE chart that I saw. It had this triangle formation and it was creating this. This is where I wanted to go short, and I did go short there. Let's go to the next. On DAX, this is DAX, the M5 chart. So what I saw was that it created a range here. You have the high here, the high there, and this was a fake out of that, as you can see. So I saw here that this candle tried to break the range, but it did not break and it closed inside. So I went short here and kept my stop loss there. And then I have these two hearts displaying that my trade was pretty good. And I actually got out here. As you can see, I have put this kind of a trend line as well. It's breaking down. I took my profits and then it went up. So that was that. But there are a few more trades in there. The morning started really badly. This is where the morning started. I told myself that I'm only going to be on the 5-minute chart, but I always trade the 1-minute chart. So I kept going back to the 1 minute and back to the 5-minute. And I confused myself, so I went short here, I went short here, and I went short here, and this turnaround gave me a big, nice 1% loss. And then when price started to go up, I saw these levels here, and I did not want to miss. So, fear of missing out. I went long here, then I added on there, and then I added on there, and turned around. And so I found out that I was selling the range lows and buying the range highs, which is the opposite of what I wanted to do. But then I saw this, so we went short from here, it went down. It's a good scalp there, and then I think once again I went, actually I didn't do this. I went short here again, looking for that breakout, which was not going to happen. And over here then I was at -3. My option was to just leave the screen and do something else or fight it. And I thought, you know what, I'm going to continue to trade all day. That's what I wanted to do. So I kept on, and then price went up. I did not take this, but I took this short based on the mantra of I'm going to sell the highs of the range and I'm going to buy the low of the range. So I sold that, got out, and as soon as I got out, I went long on this signal. As you can see, this is a bullish candle. So you see the trend up, not trend, but 1, 2, 3 trend candles going up. Then it pulls back down. I had this thing in my head thinking, should I be trading pullbacks within range? But I went for it because this seemed like a very good move, and it had one pullback and there was a second one. So I thought, why not? It would work. And then I took this one, and then after that there was another one. I didn't take this because this high did not make a new high, but soon I was proven wrong. I should have taken that as well. And then after missing this, when I saw this one, that it tried to break the range high, but did not, and created this bearish candle, I went short. So we spent a little bit too much time on this. I've got about 20 more screenshots to talk about. So that's that same chart, yes, on a different platform. So this one is one platform, this is another one. And as you can see, over here I have the trend line up, and then I have this upper range highs, and it was corresponding to something in the past as well, which probably, if I have the hourly chart, it will come. And so as you can see, we have a nice pullback here, here, and here, and this is that short. Next one. So from time to time, I'll post a question in the chat room, and I posted this, and I marked it with these 6 points, and I thought I will talk about it when I'm doing the review. So I asked the question, and I asked, can you see the power of KC? It's the Keltner channel. And obviously the response usually was, I think only just one person responded or something. But anyway, the response was, which I was expecting, is price respects the KC. But in reality, price does not respect the KC or anything like that, but it depicts something, because it would appear, and I think it's been, I know it's been tested, and it is what it is. Price moves from the mean to about 2 ATR, 2x ATR. So whatever is the ATR of the 20 moving average, multiplied by 2, and usually price would go that much and then come back to the mean, and then it would go that much and then come back. So as you can see, let's undo this. Over here, it went to the extreme, point number 1, turned around and went to the other extreme, turned around, created another extreme, turned around, and it kept going up. I was short here, that was wrong. I was long here, that was wrong. I was short here, that was wrong. But then I realized, and I corrected my mistake. I think I was also long here, and should have gone long here as well. And then went short here. But the reality is that you don't necessarily have to have this, but it's a good mechanism. KC is a really great mechanism to take trades. If you followed this method, even then, here you would have been looking for a short over here, but it went up, so probably didn't take it. But over here, when it came back up and started going down, this definitely was your short based on this method, and you would have rented that. And then when it poked up and came down, this would be your long. So that was the only long that you received in there. The point I was trying to make is every method is different, every system is different. But what I was trying to do today was only the price and the levels on its own. Okay, so let's go to the next one. And there you go. That's my trade over here that I took 15 points on. And then we had a clear 1, 2, and 3 candle, beautiful pullback. And I went short here and took another 15 points. This was a lovely, lovely trade. Yes, that's what it is. So here I marked these points on the US 30. I was looking at US 30 all day, but I wasn't trading it because I saw it on the hourly chart and on the 5-minute chart that it was in this tight range. So you see the first point here, this range, and then the second point, you have this third point that's exactly the same as that one, and then you have the fourth point, which is similar to this one, and then you have the fifth point similar to this one, and then you have another one over there, and this kind of plays its part as well. And the benefit of doing this and watching this was something that you will see later on, which resulted into something really beautiful. So let's hang in there. I will show you something really nice. All right, so let's go to the next one. So we were talking about the pound on the hourly chart, and we saw a pattern on the hourly chart which appeared to be something that it could probably go on any direction, up or down. But on the 15-minute chart, I saw this window getting created, so I posted this. I went short here at the break of this range. So basically 3 kind of entries I love to do. One is basically selling the highs of the range, and buying the low of the range. That's one method. One is pullback. So when you have, if there was a breakout, suppose like this was a pullback here, pullback short, but I wouldn't be taking that one because this did not break this low, right? So let's suppose we can see this was a pronounced kind of a level. I was looking at it on the hourly. I was very interested. I thought if it breaks, then it pulls back. Okay, let's delete that. If it breaks, pulls back, I'm long. Pulls back, I'm long. So within trend, you want to take pullbacks and get entries within ranges. You can sell the highs of the range and buy the low of the range. And then you have the breakout entries. So if this was kind of, if price came around here and then started creating a tighter range within the range, then I'll be definitely buying the breakout here before even the pullback. So, and you will see how I did this today with great success in a little while. So stick around. Let's just skip this one. This is another strategy. Okay, so I also noticed somewhere after, so this is that same chart earlier that you saw. This is that one high. This is the other one. And as you can see, it actually formed a, what's it called, an upward kind of channel in there as well. You can see with this one and that one. And so obviously we shorted this, we went long on this, missed this one, went short on that, went short on this. And then after it hit this, it went up and it's started contracting. And that's where I left it alone. And I was waiting for something else to happen anyway. I wanted it to break either this way or this way. And I think it did break that. Let's go to the next slide. So this is that same discussion on the pound dollar. As you can see, this is where your breakout entry was. And if you didn't take the breakout entry, it came to this level, pulls back. So based on the KC, you have 1, 2, 3, 4, 5, 6, 7 candle pullback around here, anywhere around here, 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 break of the candle or somewhere in the middle. You go short and you wait for price to hit one of the extreme again. So that's the 1, 2, 3 trade. So I'm giving you everything that I've learned. The 1, 2, 3 for range bounce market. Okay, so the 1, 2, 3 method is basically price poking out. So it would be something like, let's go back. 1, 2, 3 method is you wait for price to go out of the Keltner channel, the KC, I'll call it the KC. Go out of the KC lower band, comes back to the center. So basically this is momentum, resumption of trend. This is reversion to mean. So when it pauses here, you see those candle? This is the pause kind of candles. It kind of gives you an idea that now it wants to resume, and then it will be a resumption of trend. The momentum continues. So that's that trick. But there's also, you can use the KC reversion to mean when you have a sideways market or when it hits support level. So as you can see, the UJ has been going down and kind of losing momentum towards downside. Here it created that low, and this low is not too lower than that one, so it's losing momentum. And then when it tried to break that low over here, we have seen a very strong pin bar, a formation that you can trade. So there was a long here. I didn't take this one, just was talking about this. So point number one is previous low and poke of band lows. Number two is the retest of the lows and failure. So as you can see, there is a lot that goes on throughout the day. So if you would like to join us, I'm running a 75% off on our brand new membership called Platinum membership. This has never been offered before, and we're gonna go off for probably a few months. There will be no memberships because I'm fed up of this and creating something new. You know, I'm simplifying things. So there's gonna be a new thing and I will teach it online. Anyway, so that's just a sneak peek. But if you wanted to join before it finishes, 75%, it's still available till the end of April. So just go to iTradeAIMS.net and you will find out. So point number three is, yeah, success, and target 1 is here, target 2 is there. There we go. Let's go to the next slide. I've got plenty of more slides. Right, and here we go. That so this is the UJ on the H1, and then this is UJ, that same pattern. So let's suppose you saw this pattern here and you're not long, and then you saw this go up and then it started to pull back. You can refine that pattern for yourself. Or was it later on? So there you go. This is this rejection of those levels here. Point number 1 pokes out, breaks some levels, pokes out, and then does a zigzag kind of pullback towards the mean, and you go long somewhere here with stop loss over here, and you exit at the extreme again. So that's a really simple method. So if you just if you recall, just a few moments ago I showed this chart of DAX when it was identified this contracting triangle. It then broke it and retested it here. So I went long. I wanted to go long here, but they filled me there. And this too was not a bad trade. This is EU, the M15 long. So same mechanism. You have the poke high and then pull back, reversion to mean. I don't know the result of this trade, but we'll see. This is that DAX trade that I was talking about. So you have the contracting triangle, comes back, retest it, and then you have the seed. These are 2 seeds. This is what we call the waltz pattern. You have here a 1, 2, 3, 4, but more importantly, this candle, it's a trend candle followed by seeds that created above the half of the body and towards the high, towards the close, and the close of this candle was towards the very top of its range. So after that we saw 2 inside bar candles. So this was an entry on its own, but I was already in. And this is something that I was explaining to Sam. He asked a question and I said waltz pattern is basically 1 or 2 trend candles followed by an inside doji type inside. It's a very powerful pattern. Okay, that's basically DAX on the hourly chart, that same long. And okay, so on the FTSE, we started with this slide earlier. I went short here and it hit those levels and did not really move too much, but I had the chance to move my stop loss to break even. So we got out there, it started coming down here, and as you can see, this is the trend reversal after a resumption. So it tries to resume but fails, and then it breaks, comes back, retests that range, comes around and fails to break this level again. And over here we have this doji type reversal signal. So the first initial point for us to go long was here with stop loss over here. If you didn't do that, then this was your fractal breakout, you know, the box breakout. Entry was available here. I didn't take that either. When I saw this, it took a pause here, so I went long on this, and this was a very good trade as well. Okay, so DAX again, as you can see, that same contracting triangle. This was my long from here. It was very successful. It went up, and then when it came down, I think I've gone long again over here with stop loss here. Right, this is the interesting bit now. I've skipped the rest of the afternoon, and I was here all day. Only took a break between half an hour before New York Open. And so this is that US 30 chart, the one that I was telling you about, the one that had all those numbers on. As you can see, we have 0.1, 0.2, 0.3, 0.4, 0.5, and then we have this inner range created inside it, right? So right at the US Open, 5 minutes before, we have this, not that, this candle fails here, goes down, and the first candle straight away breaks this range, and I'm short. Actually, I was short here, and then I took a limit order there. So it got up and got us in on that as well. And then all I had to do was just hold and wait. And there we go. So by this time, my first entry, which was from, this one over here, I took that profit on that here. And I wanted to actually add on to it, but they wouldn't let me get in. But it was still pretty good. And it turned out into this. So we had our first entry there, closed that for 60. So let me write it down. One was 60 points. Then number two, this one is, I think, 45 points. And then the third one over here is about 80 points. So you have a total of 185. Let's call it 150 points. So this is 150 points over here. And then, interesting bit, I actually talked about this. I was live for an hour, US session. I was talking, guiding my friends, and I talked about how there was a little box created, and I saw that this, consolidation box, because I've been trading the AIMS box for such a long time, I know certain patterns of those boxes, and one of them is B trap. So the reason I got out, by the way, the reason I got out of this is that I had identified that this was the 19th of April, 1900 hours. On the hourly chart, if you go, the 19th of April, 1900 hours, you will see that's the low of that day, just 3 days ago, right? And it hit it here, so I got out there. And then as you can see, it tries to break that level here, but fails. And this is a box now. If you use the AIMS box, the fractal box, you will see it will be a box here. And this became a B trap. So some people were actually short here. I didn't take this short, but they were all short. I wasn't interested in this short because I saw this, and then I saw this failure over here. Can you see? It didn't break that. So this was not really a short for me. But even if I took it sometime, I would take it. I would get out of this and then reverse it. So what happened was that I saw a B trap. I hit the button here. I wanted the 8 or something, or 9.8. They gave me this. I got that, and I took profit 26 point or something over there. So nothing to cry about. It was pretty good entry. So add that to it as well. So that takes it to about 200 points. And yeah, so yeah, this is what it is. This is the hourly chart of the US 30. That's that level that I identified, and this is the beauty of it. I wanted to talk about this as well. You see these 3 red arrows. This is where support has been identified. Then on the 20th of April, it crashes through it here, but then it retests it and it fails. And even the next candle, which is around New York Open, it retests that level and tanks, which means that this is a very strong support resistance pivot zone. So if price comes back to it again, there will be something, especially in the next 2 to 3 days and within the week. So as you can see here, goes through it, comes back to it, retests it, and then goes up. So now it's a very important level. I don't know why it is there, but it is there. And so for that reason, and when price came to it, I took my profits, because usually around here you could have like buyers sitting there and they would take the price all the way up, and that's exactly what happened. And as you can see, the reason I had that range marked was that you can see the high here and this relevant high here, and then this high, this one, and then these two exactly the same, and then the lows are all the same. So this is a very strong range, and I thought, I'm not going in. I'd rather if I wanted, I could have just gambled it to take a long and short, and whichever goes and the other one gets stopped out. But I thought, okay, if it stays that way and then there's a session open, I would actually take this trade, and I did it. So it was a beautiful session, 200 points on those 2 attempts. And then, okay, one more thing. This is the moment. I was excited about these shorts and then the long. So this very screenshot that you see, actually not this one, this screenshot, this one and this one. When I was making this screenshot and then this screenshot, trying to, and especially this one, to explain this point, I failed to see that there was 1, 2, 3, 4 candle beautiful setup. If you don't do anything but learn this pattern, wait for a breakout, and then 1, 2 or 3 candle pullback. In this occasion, because, so if up to this candle, if you can see, you have tails, so they're still bullish. Over here, you have kind of smaller tail, and there is a tail up as well, so it's kind of like just a normal bullish candle. But here, the tail now is up, and you have a pin bar. So now it's telling you that I want to go down. So I would have gone short. I was huffing and puffing at that time. But anyway, that's what it is. I would have gone short at the close of this, and my stop loss would be up there. And then obviously I would target these lows, or if I didn't, then I gave it all back. But I was on the M1 chart around this time then, and I saw that it did not break this level. So I used my first entry to actually time the reversal, and I paid minus 22. It even, gap -4, jumped my stop loss. It gapped. And then on the 1 minute chart, which you don't see here, I saw another opportunity, and that's what it is. I am long here. So this is the long, and that was the target point. I didn't get to the target point, but I think I took 33 points on this. That's what it is. Yeah, this was the short, then the long, then the short that failed, the long that failed, and then long again here, and took profits. And looks like I could have gone one more time over here, but I wasn't paying attention, and that's what it is. And for some reason I went short here, and then I realized and thought, why am I short there? But that's the lower lots. This was the main trading bit. Yep, that's so that's that US 30 on the 1 minute chart. These ones. Let's look at them on the 1 minute chart. So this is so there was an entry there, and then this was second entry that got out there, some profits there. Then on the B trap, I went long, missed this short, at this over here. When I saw this pin bar, I went short here, I went long here, had my stop loss below this low, and so that failed. But then there was I was proven right that it was going up, so I went long again. And then over here I saw that it wasn't moving further up, so I took my profits. So that's it. This was today's action. I really enjoyed it. It's very simple. I know it's not easy, but it can be taught, it can be learned, and it can be applied. What you need to just learn is learn momentum and the simple pullback and reversal techniques. And before I go, let me remind you, Platinum package is available, 75% off. Grab it before it's gone. And please do hit the like button and subscribe to the channel, and see you in the next one.